Good day everyone, and welcome to Capital Flow FX. Today I'm bringing you another video on what is Forex trading. This is a beginner's guide for Forex trading. So I want you to pay attention and watch the video to the end. So let's proceed. Here are the things we will cover in this video. The first thing is what is Forex trading. Another thing is how it works step by step. Then why prices move and what you absolutely need to know as a Forex trading beginner. These are the things we will cover. So this is section 1 and I want us to pay attention to it. So this section 1 says what is Forex. First thing first, what exactly is Forex? Forex simply stands for foreign exchange. It is global marketplace where currencies are bought and sold. Think about it like this. Whenever you travel to another country and exchange your local currency for another one, you're already participating in Forex. For example, changing Naira to US dollars or dollars to euros. That is Forex in the simplest form. But here's where trading comes in. Forex traders are not exchanging money for travel. Instead, they are buying and selling currencies to make profit from changes in price. Now, here's something interesting. Forex is the largest financial market in the world with over $6 trillion traded every single day. Yes, trillion. That means even bigger than the stock market and cryptocurrency market combined. Because of this massive size, Forex is highly liquid, meaning you can buy and sell currencies very easily at almost any time. So that's section 1 completed. Then we are moving to section 2. Section 2 is how Forex trading works. Now, let's talk about how Forex trading works. In Forex, currencies are traded in pairs. You will see pairs like Euro USD, Euro versus dollar, British pound versus US dollar versus Japanese yen. Each pair shows the value of one currency compared to another. For example, if Euro USD is 1.10, it means 1 euro equals to 1.10 US dollars. Now, here's the key idea. When you trade Forex, you are always buying one currency and selling another at the same time. Let's make it simple. If you believe the euro will become stronger than the US dollar, you buy Euro USD. If you believe the euro will become weaker, you sell euro against USD. Then what happens? If the market moves in your favor, you make a profit. If it moves against you, you take a loss. That's it. Forex trading is essentially about making predictions. If you predict correctly, you profit. If you predict wrongly, you lose. Simple concept, but mastering it takes time and practice. Okay, so that is section 2. Now we are moving to section 3. Why do currency prices move? Now you might be wondering, what actually makes currency prices go up and down? The answer is supply and demand. Just like any market, when demand for a currency increases, its value goes up. When demand decreases, its value goes down. But what affects demand? There are several major factors that affect demand. The first one is interest rates. When a country has higher interest rate, investors are more likely to invest there, making the currency stronger. Economic news, reports like inflation, employment, and GDP can cause a currency's strength. For example, strong job data in a country can increase confidence in its economy. Okay, so the third thing, number three, is countries with stable government tend to have stronger currencies. The number four is central bank decisions. Central bank control monetary policy, and their decisions can move the market very quickly. So forex traders study all these factors to try and predict where prices will go next. Some traders focus on news and economics. Others focus on chart and patterns. Both approaches are used in the forex market. So let me be clear on this one. Those that trade economics are called fundamental traders. Those that trade chart patterns are called technical analysis. That's technical analysis. So we are moving to section 4, forex trading sessions. One of the biggest advantages of forex trading is that it is open 24 hours a day, 5 days a week. But the market is divided into 4 main trading sessions. The trading sessions are as follows: Sydney session, Tokyo session, London session, and New York session. Each session presents a major financial center in the world. Now, here's something important. The market becomes most active when sessions overlap, especially London and New York. This is when you will see the most movement and the most trading opportunities. This flexibility is one of the reasons many people are attracted to forex. You can trade in the morning, in the afternoon, or even late at night, depending on your schedule. Section 5, here we go. Leverage and lot sizes. Now let's talk about something very, very important. It is called leverage. Leverage allows you to control a larger amount of money with a smaller deposit. For example, with 1 to 200 leverage, $100 can control $10,000 in the market. Sounds powerful, right? Yes, but it comes with a warning. While leverage can increase your profit, it can also increase losses just as quickly. Yes. This is one of the main reasons beginners lose money. Now let's quickly talk about lot sizes. In forex, trades are measured in lots. And there are 3 types of lot sizes. There are standard lot, that is 100,000 units. Mini lot, 10,000 units. The last one is micro lot, 1,000 units. As a beginner, it's always safer to start with micro lot. Yes, always safer to start with micro lot. The reason is because it reduces your risk while you are still learning. I hope you understand that. So we are done with section 5. Section 6 now. Is forex trading risky? Let's be honest here. Yes, forex trading is risky. In fact, many beginners lose money. That's one thing you should understand. And the reason is simple. It is because they jump in without proper education. They use too much leverage. They trade based on emotions. They ignore risk management. But here's the truth. Successful traders don't rely on luck. they focus on risk management. Number one, consistent strategies. Number two, discipline and patience. These are the three things that ensure your success in forex trading. Forex is not a get-rich-quick scheme, but with the right mindset and proper learning, it can become a valuable skill. So, we are coming to the concluding part of it. I hope you are enjoying this video, and do well to subscribe to this channel, Capital Flow FX, because I'll be bringing forex tutorials to this channel so that you can really make money from this forex market. So the concluding part is let's quickly recap what we've covered. So these are the recap. Forex is the global market for trading currencies. Okay, you trade currencies in pairs. That's number two. Prices move based on economic and political factors. Take note of that. The market runs 24 hours a day. 24 hours a day, then 5 days a week. Leverage can increase both profits and losses. So if you are trading on leverage, you must be very careful. Now, if you are just starting out, here's my advice. Stay with education. That is why I want you to subscribe to this channel, because you always get forex education on Capital Flow FX. Practice using demo accounts. I'll still bring more videos for you. Practice video where you can learn more about forex trading. And never trade money you cannot afford to lose. That is very risky. Don't trade the money you cannot afford to lose. So we are done for this section. Thank you very much. Do well to subscribe and turn on the notification bell so that anytime I drop a video, you always be the first to get notified.